Hello, everybody. All right, let me know if that looks good. I had to change a little bit of my display settings as I just got a new desk and set everything up again. All right, looks like we're all good. So there is not quite a lesson plan per se for today, but what we're going to do is we're going to go through the scans, see what we got setting up into the new quarter, talk a little bit about what we look for, and also how the decoupling works, because it's always something very important when new quarters or new months open. So firstly, we want to know, when is it opening, right? So we're going to open on Monday. It's going to open on the 1st. And that means we're going to have the least amount of evidence this whole entire week, because the quarter and the month and the week are all going to open here. And that separate opening will not occur until next week. And then we'll be able to identify a separate weekly open, which will give us more information. And then next month, we will separate the month and quarter openings. So we'll have slightly less information this month, but more focused on that weekly group being coupled together. As well as on Monday, you're going to have the day and the week opens the same. So really, Monday, we'll see what happens. We don't have to go in there all willy-nilly. But then Tuesday, we'll see if that stuff gets reconfirmed or not. So be very aware of that coupling and decoupling with the new quarter. As far as what we want to be looking for, if you watch the last macro vid, we're talking a lot about the inside bars and the two twos. So this quarter, we'll see what is setting up in that side of things on actionable signals. And then after that, we can maybe answer some questions and talk about anything else you guys would like. So without further ado, we're going to take a look at the scan site, and we're going to start with the quarter. And we can scan the quarterly time frame. We can firstly look at indexes, and it's a really good thing to do this going through a big part of the market on these higher time frames, because then you get more involved with what's happening right now. So if we scan the quarter on the index, it's like, well, what do we have inside into next quarter? It's like, well, all right, we know IWM and XLV will be our inside quarters. So if we ever see any daily or weekly setups setting up, and we see those two names this next quarter, we'll know that. And thus we can take a look. So you can see IWM inside on the quarter. And if we look at the quarterly broadening information, you had this very slight lower lows, the slight higher highs. These two bars become an outside bar to all of this. So now one, when is this going to become a two is our question. We can then drop time frames and take a look, and you're also double inside month. So going into the new quarter and the new month, either side of that can get our attention, as then we'd have a two to be trading with, either for expansion through this stuff, rev strat back through, or inside bar down reversal. Oops. Let's go on the weekly. And on the week, you can see we won't have any reversal next week unless we get a two down. Then we'd have the 2-2 week to trigger the month to trigger the quarter. So that could be an issue if we take this out next week. We're not very close. I apologize. My mic's in a new spot, so I keep hitting it. Let's see if I can fix that. All right. If this sounds bad, just let me know and I can see what I can do. But if we go and take a look at the daily IWM, it could go two up or two down next week. So either side of that gets our attention. If it's a two down day, day could trigger week, could trigger month, and then that could be a really big problem for IWM. But depending on if it's up or down, then we'll know. If we go to the healthcares went inside and up last month, so they failed to take that equilibrium higher this previous month, but they did break higher. So until that reverses, that's technically still good. They're nowhere near reversing to the downside to start, and it's closer to being a hammer quarter to the upside. So depending on the new opens here, you can see on the week, it's closer to going two down, but it's also, right inside of that previous range. So we'll let those open, see what they want to do. On the daily, you'll have this little try playing out. You have the major try. You also have the sub try. like so. So those are the only things we see inside. What we can then do is also take a look and say, well, if the healthcare sector is inside, then who in the healthcare is an inside quarter? So who's doing that? And we have, looks like 14 technically, which comes down to 7 because bullish and bearish inside of our breaks are both accounted for. So we can take a look here. CI, you can see that's closer to being an inside bar down, back through previous range, and that'd be a 2-1-2 reversal, back through the broadening formation. So if the healthcares are weak next week or next month, this would be the first thing to go after as it's taking last quarter's lows. If you go to CRL, you can see this is also relatively a lot weaker. Top of the broadening formation, inside quarter, which would be closer to inside down, back into this 3 to take these guys out. So similarly, it's would be a better short as it's closer to going 2 down. CTLT. So you can see this is relatively much stronger as it went up last quarter. And then the previous or the most recent quarter went inside bar momentum hammer. So if you look at something like D-Dog on the weekly, this is an example of what that can do. So inside bar momentum hammer, and then it takes off back through previous range. So if we go back to CTLT, you'll see on the quarter, we've got that same exact type of setup. So if things are stronger, that is something we'd want to know. If we go and take a look at the mother bar though, we are inside of this. So any changes in monthly or weekly continuity, if we take these highs out, momentum, very relevant because this is all still stuck inside of this bar here. But it is relatively stronger. And we can actually take a look at the month. So the month did go 2-2 reversal last month. The week is a 1-3-1 from the looks of it. Yeah. So if this goes 3-on-2 next week, they could trigger that in force above this stuff if healthcare's come out strong. We go to EW. EW, another example of a momentum hammer, a little stronger. It is at the top of the broadening formation. So this is why we call it momentum. Whenever you're buying here, right at the recent highs, you're at exhaustion risk. So we'd like to let that open a bit, see if they do come and get after it, or it's got to go right away. If you go on the month, it was a soft rev trap, 1, 2 down, 2 up with no actionable signal, which makes it soft. So it did what it was supposed to, but going up did not take this out, so it ran out of time. On the week, no actionable signal. So there's top of the weekly try. GEHC, another example of one that's a little weaker. So they go into recent highs and then exhaustion risk on the new quarter, come back in. Here's the broadening formation. IQV. You can see as we go through this, it looks like a lot more weak healthcares than strong healthcares. So that's something I'd keep in mind with the inside bars. Inside bar here, back into this 3 here. So IQV, another example of a weaker healthcare name potentially. And then SYK is the last. So SYK inside quarter momentum at all-time highs, which we'll see. If we go to the month, you can see this is more of a shooter counter hammer. So this is also, although it looks stronger, that would be, since it's shooter countering a hammer, this is considered momentum. So below 33612, that could really get going if they have some issues in the healthcare sector. That's something I'd want to know about. We can then go and take a look. We don't have a small cap, so we can't just scan small caps in here. But what we can then also do is go and take a look at the other indexes. See, do we have any hammers or shooters? You can see the healthcares, technically hammer on the quarter, and XLY. So this is momentum hammer with consumer discretionary, and that's mostly because Tesla had some recovery, setting up a quarter. And for some reason, TradingView charts have been odd previously, or today. But we can also see Amazon is also very strong. So it's mostly those two in the consumer discretionary. Take a look at shooters. SMH. So it looks like we do not have shooter quarter, so that's just something wrong with the scan site. We had another problem earlier with Walmart's on one of the lists. So just a bug, not sure quite what's going on there. But in the semiconductors, what we can see is it's continuation month into all-time highs. So it hasn't reversed. It went 2-2 reversal in here back to the highs. Now, they're going to be much closer just going inside to start the new month. So they could start chopping it up a bit. And obviously they'll have NVIDIA, which went 2 down week, so we'll see. It's going to probably open as a 1 on the month. If we go to SMCI, this is a problem. So if this goes RevStrat, they got some problems in the chips. So below that, SMCI 74122, I would want to know about that for sure. And we could see last week they did 2 up, 2 down. It was a short week, so they didn't get all the way to its magnitude. But you'll see this on the daily. So like big old bearish engulfing 3. So what this tells us is they were willing to obviously sell down and then they bought up, which if you go on the daily, you actually want to draw your chart with something like this. You can see they sold down, bought it back up the other way. Here's your 3 of this. And then they tried to buy up and then boom, sell down against. So buyers and sellers, you can see sellers are trying, buyers try back, sellers come back again. So this looks really bad for the SMCI guys. No weekly signals though, but on the month, I definitely want to know about that. We can also go to a bit of the stronger ones. So in the semiconductor material space, LRCX a bit stronger. The hammer week. If you go on the daily in there, nowhere near anything going into the new week. AMAT in there, that's of interest. If we do see any chip weakness, you got pivot machine gun into the new week. We go back to the charts here, or the scans. We can then also take a look at hammer quarter overall. So what this will do is just give us any hammer quarter in the market of all of the symbols that we scan, which you can take a look in here. We have 612 on the stock side of things. See if we take a look at hammer quarters. We got 73 of them. And what I like to do is sort this by ATR. So you can get the higher ATR names. And if they're over 1,000 like ASML, normally I'm not touching that myself, but these are the ones that I'm most interested in. We'll take a look at the other ones shortly. That being said, in the tech, SNPS. So this is an example of momentum. The inside bar hammer quarter. It's at all-time highs. So once it makes all-time highs, we don't know. We would have continuity. On the year, it's still very green, but got to be aware that there's not much magnitude on that. ASML, which is in the chips. You can see momentum hammer quarter, and again, at all-time highs. So you got to be very aware of that. I have too many charts open in here. FedEx in the industrials. So you can see FedEx momentum hammer quarter again, not at all-time highs, so it's back to the previous range on the broad information. And you actually have the bigger try, and you also have the sub try in here. It's got only 20 bucks a range, just about. Take a look at Meta. See another momentum hammer up at all-time highs, though, so you gotta be aware of that. When we say momentum hammer, what we're saying is, well, someone came in here and sold, and then it came all the way back up. So either of those guys got trapped short, or we have an aggressive seller in here where the buyers did come back. But depending on what they do next quarter, if that's going to be a 2 up in force, or if it's red and coming back through that, we're still not sure. It's a hammer signal, but we don't know until that's gone in force if that's going on or not. So we'll see. But looks like we do have a good chunk of technologies on this momentum hammer quarter scan. So Microsoft similarly. NXPI, which is also in the chips. You can see a slight Momo hammer. Top of the try. UHS, United Health Services. So this one's interesting because you can see it's closing outside of the broadening formation. So this is actually closer or more likely to attempt to expand if it can get above these guys. 193 just about. Let's see, 194.02. They got a 3 on the week, so we'll have to work out what they're going to be doing with that. But you'll see you got nice big broadening formation up here on the daily. And that is in the healthcares, so we'll see. SNPS. Oh, I think we already took a look at that one, didn't we? There it is. BIIB and Charter. Did it make the new low? So it did not, but what we can say is we are at the bottom of the range. So if it was going to recover, it would look something like that first with the hammer quarter down here. If you go on the year, it would be back and reclaiming last year's lows. So although it's a 2-2 reversal year, it's not in force. So we'll see. It's going to be part of that same healthcare sector. So it's not an inside quarter like a lot of the other ones, but has the hammer if it's going to come back through the previous range. And the reason we can do that is because if you go to a weekly basis, or even on the quarterly basis, you'll see it. But we can see the broadening formation in here, drawn from right to left like so. So although it did not take those lows out, this is still a broadening formation to this. And also, and some people will draw it like this. So this is the internal try. They try to take them down here. Not strong enough, so they're coming back into the range. So there is no monthly signal or anything, though. We'll be aware of that. Then we got now in the tech sector. So this is a hammer quarter for 222, 2 up, 2 down, 2 back up above that stuff at 795.44. And you see on the month you got a PMG, so they ran out of time. They took it out, but ran out of time in the month. So next month opens, and then you still have this PMG to potentially take all these guys out with the hammer quarter now. So that'd be good to know about if we get tech rally. We already did take a look at Tesla, which has the hammer quarter, and you'll see the try in there as well. So looks like that on the quarterly time frame. If you drop to the month, it's the same thing. If you go to the week, it's the same exact deal. Notice all this try stuck inside of everything to the left. Now, we also have that scenario going on here. Very slight lower lows and higher highs on the week. So you gotta get out of this thing if we're gonna get it going. And then the last one in the tech is Z scalar. So hammer counter shooter on the quarter. What this can also potentially tell us is we're getting very stuck inside of this range. Because they tried it to the highs, tried it to the lows, and now they're right back in the middle. But since it's a hammer, that's something we'll want to know about. And Z-scalar is also tech. So now Z-scalar, SNPS, Autodesk, and the tech, those are going to be the things we definitely want to know about. And we'll see if Tesla joins that or not as well. With pretty good performance into the end of the quarter on Tesla. We can also scan for specifically patterns, such as the 3-1. Looks like we don't got many here. And XEL Utilities is the only 3-1. You can see on XEL, they do not take out the yearly exhaustion risk down here yet, so that could still occur. Then they have the 3, which tells you they bought up, they sold down. And they tried to buy it back up and then won Momo Shooter. The only thing we don't like here is Mother Bar. So it's going to be kind of difficult to get out of this 3. Doesn't mean they can't. Just got to be aware of that. And that tells us we want to look at the rest of utilities as well to see what's going on there. And actually, I already looked at those today. So what we'll see is on AEE on the quarter, that could be a 222. ED on the quarter could also be, there you go. So ED, you could see potential shooter back through previous range. And then AES, the Rev Strat 122 back their previous range in the utilities. So we might see some of the utilities try and give it up on that rally. Obviously, the XLU is a little stronger than the rest, but it has the inside month. So we'll open as an inside quarter and potentially inside month down. We'll have to see, is that equilibrium going to get countered? I'm going to try and bring them back up here, or is that reversal going to stay in force below 67.82? And that'll tell us should we be on those things taking last quarter's lows or not. In the Utes, the other thing I want to take a look at, which was not on the sector list, is gold. So this one is in the yearly video. For the 1312 year above 193.18, that's still good. So it still has the rest of the year to go after that. The month is a 1, and it closed red. So this is corrective activity telling us that whoever has been long in here, right? Potentially they got out, or some people got short. Now, we want to see an ideal scenario would be boom and then 3 the other way. Doesn't mean we can't get the inside bar momentum continuation, but we prefer triangle out first and then go after it. And if you go to a weekly basis, it does have a hammer counter shooter week in the next month and next quarter. So definitely want to know about the gold and see, is that enough to get it to start going again, or do we need to stop these guys out first? It tells you to look at silver as well, which is a little bit more iffy. Still has this inside month, so it's holding up. But we have gone into exhaustion risk on silver, like so. If we zoom back out, it has been a lot higher. So if that can get going again, silver can go a lot higher, but we'll have to see. And that also tells us to look at things like JNUG. JNUG also inside month, which is the miners, as well as like nuggets. Slightly weaker, going 2 down. Stopped some guys out. Goes inside weak, so a little stronger by not being a 2 down weak. There's also specific miners, maybe WPM, which also went 2-2 last month. Closer to a RevStrat quarter, but gonna open as a big 1, so we'll see. And also like RGLD, Royal Gold, going inside month. So we'll see if those precious metals start going and showing up. And the cool thing is, when we're going through this, what we don't expect to do is memorize every single one and then take them all, right? What we want to do is we want to hit the quarterly time frame. We can scan, we can just say in force. So anything in force, inside up, 2-2 reversal, rev strat, whatever it may be, hammer shooter, that will show up on the list, and we can just filter this as the quarter goes on and build out our watch list as things go in force. The other thing we can do is use like the daily, weekly, monthly setups to trigger the quarter, which is something we will do. But I don't expect everyone to just go through and remember everything, but it's good to have a visualization of what are these doing on higher time frames, because we're going to confirm and negate all these signals across the daily, the 60, the weekly time frames as the trading weeks and days go on. So if I go on my daily list and I scan and I'm like, well, where's all the hammers on the day? And then all of a sudden we have a ton of, let's see, what do we got here? We have a ton of consumer defensive. We want to know what the staples sector looks like, because if we have all these hammer days and then all the staples, all the staples are really getting going with potentially, we'll see on like PM here, maybe we got 3-2 quarter on PM. That's something we want to know about if the 3 starts expanding. So if we can know what all the sectors look like, or at least have an idea of what they look like, it makes it a lot easier to do your nightly scanning as well. But that being said, what I want to know is in the energy, not the energy, in the quarterly, do we got any 3-2-2s? So only 3-2-2 we got is Adobe. So see on the quarter, 3-2-2. And this is a great thing to know about because you have a 3, you have a reversal, 2-2, so 2 going 3, and then compound 3 next quarter if they can take them outside of this. And if we go to something like Netflix, you'll see an example of this that we pointed out towards the end of 23. You have the 3-2-2 in here, right there, and then notice 2-2-2-2-2-2. And this is the first reversal against, way up there. If we go to Amazon, did the same exact thing at the same exact time. So really good examples. You see 3-2-2, then they get outside of the broad information and expand it. So That's what we're looking for. Adobe's the only one we got there. On the quarterlies, let's see if we got any rev strats. We got pod, reg, zts. So a few healthcares. Pod. I'd call this a soft rev strat because there's no actionable signal. It would help it try and get out of its quarterly mother bar. On the year, though, notice very stuck. It is a 3 last year, so we'll be aware of that, and that could get a lot greener. But how's that not going to be a 1 on the year? Get a ZTS. This is more what we're looking for. Get the quarterly broadening formation, hammer quarter above this, 181.66, and its magnitude is 201.92. The month is a little bit of a shooter, so we'll be aware of that. And the week, not sure what happened this week. Looks like they had something bad in the news, which is always a good sign. So in the week, it looks like there's a slight gap up and 2-2 back in. So here's the daily track. Gonna have to get out of that if they're gonna get the quarters going. And then real estate, REG. Personally, I don't trade much of the real estates. I think they're not really the best. At least I don't think they're the best investment right now. But if we go to XLE, we can take a look. Yeah, so you might have the rev strat quarter there, so that could get real estates moving. You can see they've just been inside year all year, so it's not much to talk about unless that changes, but the quarterly could do that. So REG is one of the only ones in there that looks like that on the quarter, at least that we see on our list here. We can also look potentially with the real estate's rev strat. Is there any inside quarters in there? Yeah, so you got some relatively strong real estates going 1, while the rest are 2 down. ARE, 311 quarter. So it's relatively strong because it didn't go 2 down. Still weak though, a little bit of a hammer. Close out some of these guys. CBRE. So you can see it's relatively strong as it's not a 2 down this quarter, but closer to going 3-1 or 2-1-2 reversal back into this 3. The month is a rev strat setting up, so the rev strat month could trigger the quarter if that plays out. And CBRE is one of the better ones. And then you got SPG, and that's it. So you can see relatively strong as it's an inside quarter, while the rest went 2 down. It's also a momentum hammer. On like a monthly time frame, you'll see the try a little cleaner. You can see all of this price action is stuck to everything left. And then they're right at the top of this internal try as well. So this is stuck inside of that, which is stuck inside of that, and that is stuck inside of that. So we gotta start getting out of these, right? Now the quarter could make that happen, at least try and take some of these guys out. Take a water break. Bitcoin, yeah, we'll take a look. Yeah, and if you guys have anything you want me to look at, let me know. But Bitcoin, so quarterly inside bar. So it makes it really simple when you know what a 1 is. That's an equilibrium. Also means you're going to have a weekly broadening formation. Looks like it made, I don't know if those are equal highs or slight higher highs, but your broadening formation, you have the slight lower low in here. We can call those equal highs still the top of the try. Because when we're identifying the try, what we're not identifying is like this beautiful, perfect pattern that has to pattern that way. What we're identifying is we have a previous range. So what we'd say is you can see this bar, this bar, this bar, right? And then we made the new low to those bars. So at that point, this bar, since it did not make the new high here, it's not a try since it didn't make the new high there. But what we can say is from this bar all the way through these bars, notice all of this is outside of these two. So that's still a try. Or if we go to like a daily chart, you'll see this. All this price action, since this bar here is outside of all this price action from this bar to this bar. And you'll see it starts very small. Outside bar, they poke down, poke up, And they have the new daily try that gets stuck inside of here, expands lower, takes those guys out. So what we want to know about is on the quarter. Since at the beginning of the year, we did mention the inside year up. They go into all-time highs, right? And if you want to go look at that, you can check out the yearly macro video. But we mentioned the inside year here. Inside bar and boom, all-time highs. So similarly to the yearly signal, on the quarter, we want to know which side of that one breaks, up or down, right? And we have no monthly signal. It could become, looks of it, could become an inside bar down or up next month, but currently a very sideways barcode. So we'll wait and see. We can also actually go to Ethereum. So Ethereum was another one on the yearly vid, and you can see they took out initial pivot target here. So double inside year and up, boom. See, very nice for 59%. Now they're still stuck inside a bit. The month is a 3-1 on Ethereum. So this is something you want to know about next month, because if this breaks up or down, it's either going to be continuation or reversal. You can also check the quarter. If it breaks up, you got the quarter and the month going to the upside with the year in force. So that'd be a perfect signal for the macro guys, because you'd have the year and the quarter and the month signals all in alignment. Where if it breaks inside down quarter, you'd have the month and the quarter signals in alignment, countering the yearly signal, which would enforce about here. So you'd want to reclaim last year's highs if you're going to trade a short. And the other cool thing is you can go on crypto and we can do the exact same analysis. Say, well, give me the quarterly time frames, give me the 3-1s, and you're going to see here's all the 3-1s for crypto. So we go take a look. Let's see, AMB USDT 3-1. So this is much closer to taking all these guys out to all-time lows, and everyone loves to short the small cappers, 24%, or the small coins. Ali 3-1, so that's also probably going to zero. Token 3-1, so it doesn't look too good either. That's about it for the 3-1s, but you can do both. Apple PL, yep. Let's take a look. PLTR is one of my favorite longer term stocks. Look at this. So I was posting very many, very many years ago, this big old broad information they made. So you can see if we look here, they make the slight lower low to this and then higher highs to the previous quarter. So this on the quarterly, this is a big 3. So they went 3, they poked up, reclaimed the 3, which is a broad information, then took out the lows and then reclaimed it again. So where's it going? Up there. And ever since it reclaimed this stuff, that's where it's trying to go. So you can see the quarter, they go 2-2 rev strat, 2-2-2-2-1. So PLTR into next quarter, that could go blasting off. What you got to be aware of is short-term exhaustion risk at 29.90 or 29.29. So if it's going to keep going, it has to stay above that. You also have short-term exhaustion 27.50. Signal is enforced above 26.57. And on the month, you got no signals. On the week, you could have the weekly to trigger the quarterly. So that's something you'd want to know about to start the new quarter, if that can get going. Snap. This one's a chop shop, so this is something we call the mother bar. Boom, boom, how you getting out of that? And what normally will happen is you'll start the new try as you're going to get smaller price discoveries where they figure out are they going up or down. You can see here's the try, and then again. This is why the mother bars are a big problem, because you can see the big range here and then stuck inside, boom, new try. Bigger range here and then stuck inside, boom, new try. So by the time it starts moving, everyone gets killed, chopped up. So very important to draw those out and understand you're stuck inside of that. So how's that going to change? And if you look at Snap, hasn't been the best one, right? Very much a sideways company. As far as the year goes, what we'd say is on Snap, either side of this stuff gets our attention, because that'd become a yearly signal. But this year, they're not buying Snap. They're doing not much, right? Now, if it went inside and down or something, that'd be a great short back through all these guys. So that's something I want to know about. Inside and up, going to all-time highs, but it could expand. So it's still doing nothing this year. We'd prefer to wait till next year. Oh, thank you so much. Well, the analysis doesn't quite change, except here's your mother bar on the yearly snap. So notice 2 years stuck inside, no good. The month, it's inside, or is it slight? Nope, slight two down at the highs. So they're still trying to take these new highs out. After they do that, though, you're gonna have to either stay above those or you're coming back through again. So this one, just like we are talking about previous mother bar, yeah, I'd be very aware of that. You're completely stuck inside of this. So are you anywhere near taking out 47 or taking out 7? Neither. Let's see. Could you please look at SGML apart from the fact it's low volume with shitty spreads? Would shorting here be equivalent to shorting the lows? Nope, it's not all-time lows. It could go lower. The year is bright red. Tells us they're selling this year. Inside quarter momentum to confirm full time frame continuity with long red bars. That's what we look for. And you'd look to take out the PMG. And what we'd like to say is they've been a lot lower. So where are they trying to go? If this goes measured move, get another 59%. Get a lot closer going down there. If you look at a dollar amount, another $18 and they'd be below zero. So measured move below that for sure. Yeah. Year confirms via quarter. That's what we look for. Big stop? No. It's a momentum shooter. Your stop would be pennies because it has to go instantly. And in fact, since it's a quarterly signal, we'd rather use the daily chart to get in on that. After TTO, we can look at Roku, sure. Roku, yeah, since been broadening a good bit. Quarterly, so that could become rev strat to the upside next quarter. And you can see 3 slight higher highs, lower lows. 1 pokes down, recovers. So rev strat above that, 66.58. Similarly to Snapchat, though, got the mother bar problems. So ever since Kathy Woods got creamed with the 2 year lease, right? Double inside Roku. So it's not the best buy. You just gotta be aware that it could change. You also have this hammer counter shooter month. So something we want to know about, but we do have to change some yearly continuity if that's going to be the case. I do like this setup though. 322 month to trigger the quarter back into this 3 as well. Pretty solid. We'll keep that one up. Yeah, we can take a look at crude. We can also take a look at the energy sector. Crude. So here's your big old try. We did post that on the Twitter when it was up in this area, up in here. They're closer setting up the monthly, and then they went 2 day, and they did not set that up for us. And you can see it got bigger, boom, and bigger the other way, boom, which is why we love to trade these. Now, sitting at the top of the try. So we look at the quarter. It is 6 months inside of that 6 months. So sideways. It's also still an inside year, but it is green. So mostly on the oil type of things, if we like, I know a lot of people are expecting like war and whatever to change oil prices, or maybe we get some dollar problems, but you'd want it above 95.03 before you start expecting anything crazy. You can see your big old try on the year. Did it go to negative 40? It did. Did it reclaim up this stuff? Yep. Other way. So that's super cool. But you want to start getting out, and then you'll see the sub try in here as well. So you need that first, 95.03. On the month, it does have a 3. So if that's a 3-2, this would be expanding the try here, which maybe they could take those guys out. We look for these guys first, though, at 87.73. But it's an outside bar, so we'll see. Go to XLE. You got the monthly hammer there. And if that works, it would re-trigger the yearly momentum, 2-on-2 measured move. So that's something we want to know as well. You can see the month re-triggers the year. And we did have the 2 weeks last week, which we mentioned was a simultaneous break. So at this point, we don't have much higher highs to draw off of, which means we'll get a higher high more than likely. So we'll see. on like a 2 week basis, or closer to 2 back up with the monthly. If you go to XOP, a little weaker. So you can see there's a little bit of the problem. We'll have to see if they come back next week and next quarter. OIH, you can see a bit stronger. And the reason it was is because notice the inside week here, June 20 or June 17th. If you compare that to XLE, 2 down on the week, XOP, 2 down on the week, see OIH was relatively strong. You also have the try you're coming back through like this. So that could still go a lot further. It's nowhere near reversing this stuff. On the day, it's just doji at the highs. So we'll see if it sets up. Don't like shorting after a big drop, then you're not doing it right. You're supposed to play long red and green bars, for example. D-Dog is a great trade example from last week. If, like, okay, it goes up really fast and super high, and everyone's like, I don't want to buy it. It's up too much. And it goes inside hammer, then it breaks, and then you get a confirming daily signal with the weekly signal. The same thing as using the quarter with the year. That occurred right here, after it already went up a lot. Because they bought, brief pause, and then buy again, measured move. So SGML, you have the yearly enforced 2-2 reversal with magnitude to this, 851, plus the quarterly momentum shooter measured move. Boom, boom, and then measured move pivot machine gun. So that's definitely something you'd want to know, is they could come back and sell again like this. AZN, they had a nice hammer quarter last quarter. It's bright green, but that doesn't quite matter for next quarter. You have outside years, so once a three, always a three. We don't know. What we do know is if it's above, it's above 76.56 and 2 up on the quarter, it would be continuing the rejection of last year's lows. Bigger 3 expansion. You can see they rip back through previous range, and then all-time highs, and they're kind of just chilling out now. Wow, this standing desk is super interesting. I haven't stood this long in a minute. Got to get some padding for my feet, so my knees don't hurt. Yeah, we'll take a look at the SPY. So SPY closes out at the highs on the month and on the quarter with the technical Momo hammer. On the week, though, shooter. So we'll see what they come into with next week. And what we want to know is if that's a 2 down week with quarter, month, week continuity all red, that would be a bit of an issue on the new flip, but we'll see. Q's already had reversed, and then you can see they went 3. And then now 3 on the day. So how are we getting out of that? And does it pivot machine gun some of these guys, or at least try to? Or what are we going to do? Since we have a 3 on the day, we'd rather let that open and see. But you have the 3 on the week and the day, so you already know what your broadening formation looks like. It looks like this. We go at 60. I can tell you with certainty, whichever side of this we start expanding is going to be where we're trying to go, at least to start. We go to SPY and the Qs, SPY specifically. SPY is still a 3-on-2 year up. They had some pretty close call trying to negate the monthly stuff, but the new monthly flip recovered it. So they got pretty close, where you can see the yearly open was here. They trade like 4% away from it, but nowhere near negating that, so they did not take it out of force. And NASDAQ is still just expando. You can see the slight triangle, these 2 bars inside of that, and then 3-2 on a 2-year chart. And then we go to Dow Jones. Similarly, it's still expando, but we have those inside months, Dow Jones and IWM, which will be of importance for next month. For some reason, this isn't showing correctly. So looks something like that. I don't know what's up with trading these charts, but you can see YM, the future, double inside 311. And then RTY or the IWM, double inside month as well. So that's something we'll definitely want to know. You can expect movement in those two next month, next quarter. CRSR short. Let's take a look. So this is different. Notice it's not through previous range. You do have a signal on the year, but it's not bright red. We're going into the third quarter of the year. The quarterly was inside down, so now we're at exhaustion risk. The month is inside month momentum at all-time lows. So notice compared to your previous one, back through previous range with momentum with signals and bright long red bars, which is what we look for. That one does not have that. At least not as much as we're looking for. Doesn't mean it can't work, but you're at all-time lows, so you have a lower likelihood. UPS, yep. So UPS was an inside quarter down last month into exhaustion risk. It is 2 down again on the year, back through this 3. So UPS is still trying to go down here, 82. The month is closer to trying to go 2-2, if anything, so there's just not many signals here that we have. Everything's continuation. So what we'd prefer is, can they like stop some of these guys out and then go for the dumpster? Yep, a winning trade looks like a reversal with continuity back through previous range. That's what we're looking for. KMI on the mother bar. Yeah, look at this. So you got 4 years inside. We do have the inside year up though. So in KMI with the energies, that yearly signal potentially could change that. Looks like it did hit its yearly magnitude. This is one that we did talk about on the energy relative strength side of things. So it's still a relatively strong energy name since it's above last year's highs still. So it did a little triangle out, but we'll have to see going into the new quarter now because we get new quarterly continuity. So we have this 3, the poke down, the poke back up. Now it's either rev strat back through previous range next week, or they stay good and then reconfirm to get that stuff trying to go again. But more so, we want to know if the energies, how many of these are taking out last month's highs or last week's highs at the very least, next quarter, next month. Because if we have all the energies doing that and we get crude oil taking last week's highs, then we know it's a buy, right? Like all the energies would be going up at that point. Which the way we'd find that is at the beginning of the new quarter, new month, what we scan for is, are you 2 up or 2 down this quarter, this month? Because what I'll tell you is it a bull or bear market? So for example, on the year, we can scan and say, well, we have 437 twos up on the year. So yearly uptrends, 437. On the downside, where your bear market is, you got 107 two downs. So still a bull market, right? Now, could that change next quarter if everything goes quarters down or something? Yeah, but we're nowhere near that. At least not yet. LNT and the utilities got inside month, inside quarter. You can see still an inside year. A little stronger than the rest of the utilities though. So we'll see. It's the only one in there. Real estates. Already looked at ARE. We'll take a look at the financial sector. I believe the XLFs are inside again. I don't know what is up with trading view today. Could be wrong. Let's see. See for June, it's just not showing it. Now, 4-week chart, it is inside. So I mean, add up all the weeks of June and take a look. So 1, 2, 3, 4. No, it looks like it was a 2 down. May, June. Yeah, so it was a 2 down. It's closer to chopping around, maybe a day into the weekly signal. If we go to the regional banks, just shy of the lows. And that gives us this stuck inside of that still. And this one's still chopping up a bit. Hammer counter shooter month did go inside down on the quarter last quarter, closer to the monthly into the quarterly. We'll also see things like Bank of America in the financials, momentum hammer on the month, with the momentum quarter, with the 322 on the year, Bank of America. That's from the macro yearly video. Citigroup is also still a 2-2 year from the quarterly or the macro yearly video. Also momentum hammer quarter, and also hammer counter shooter month. So Bank of America, Citigroup with the financials, that is something I would want to know about. How's he doing? I mean, he didn't do bad. He was mostly trading like 5 and 15 minute stuff, like super quick stuff, and now he's a lot more focused on his sales job. So he took like a month hiatus here. Let's see. Intel looks like a chop shop. Last quarter was very red, but that was last quarter. Inside quarter down, hit magnitude. Still double inside year, but closer to becoming a year and down, which could take out all these guys. And see, Intel looks like this. I mean, the lower low, they tried to go for the higher high, not strong enough. Countered by the shooter quarter, and then or shooter year, and then double inside year. So as far as what we'd want to see, since the year is so bright red, we'd prefer to see them triangle out and then give us a new signal lower. But depending on where that week goes next quarter, you're nowhere near two up, so you're going to be a one more than likely, at least to start. And then on the month, you have inside month, which will either confirm or negate what they were doing previously. Snow, yeah, snow is a great one from the macro. 322 quarter. Didn't quite make the all-time lows. There's still a mother bar to this stuff. But it's closer to reconfirming that next quarter by going two down again. If we go on the month, though, what we'll see is this. So we'll notice higher highs, right? Reclaim, back through previous range. It took out most of these guys. Hammer here. So given the new monthly and quarterly continuity, we'd redraw the try like this. Because this is still a try here, although we have a bigger one. We'd call this a sub try. 322 month would reclaim back into this three, back into this bigger three. So above that, 139.06 on snow, we'd look for a magnitude of 168.80. On the week, it's an outside bar 1.3. So 3-2 expansion week would get the month going. You'd open as an inside quarter though. So you gotta be aware of that. But we do know at least a chunk of the tech here, or this good chunk of the tech here is a lot stronger with a lot of Momo hammers. So potentially we could see them recover. Adobe would probably be a better one with the 322 here. And you can see it'd just be stronger because it's a green, or it could become a green year, whereas snow, not so much. Yep, of course. Any and all charts, you can take a look at all of them. If there's any other cryptocurrencies of interest here. Solana's moving with Bitcoin doubling or inside month. You can see sideways mother bar, and this is where people just get absolutely wrecked. Barcode up, down, up, down. Now what? Yeah, inside quarter. You can see this is why a lot of people fail is if you're playing this 2-2 reversal weak and you don't understand your mother bar to this stuff and you're targeting these highs, you get absolutely wrecked. 3, 2, 1, 3, 2, 2 down, takes them all out. Adobe already took to take a look at that. You got the 3-2-2 quarter for the compound outside bar. WBA, where's the bottom? It's been a lot lower down there, all-time lows. You can see the WBA, the big try. Boom. Slight lower low reclaim right here. They poke up, which makes the range bigger. Some people will choose to redraw, some will leave it drawn like this. So it makes the range bigger, reclaims the previous range, and then boom, 2, 1, measured move back through all these guys. So where's it going? Down there. And this is another good example of what we'd be looking at on SGML with the measured move. Where you get the inside and then confirmation back through the previous range. WBA did that on a yearly basis, inside and then reconfirms measured move. And they're still puking. Nike. So Nike was already on our short watch list for the quarter, I believe it was the last macro video. So Nike inside your measured move going down here, Nike 60, and then same thing, pivot machine gun through these guys. So Nike, bad problems. You got the rest of the year to short that thing. See on the month, 1-3, and I believe they did that with the earnings, right? Yeah, they did. So it puts that in force. And this was part of the white girl stocks with Lulu, which we mentioned the 3-2 or the 3-1-2 quarter in the last quarterly macro video here. So you can see the try, boom, 3-1-2 pivot machine gun takes them all out. And since it ran out of time, we still got next quarter to try and reconfirm that. So things like Lulu, if you want to short Nike, but Nike doesn't have a signal yet, Lulu right here would reconfirm that because it's the consumer discretionary. And I coined the term white girl stocks because they all got really hit. You can see Alta as well with the 3-2-2 on the quarter also got hit, the white girl stocks. And notice Alta, if this works out and they take this out, who's to say they can't reclaim these guys all the way back into this try? So you can see they get out of it here, form a new broadening formation, and then if they can get out of this one, they'd come back PMG through them. So that'd be a problem. Starbucks was another one on there, and you'll see this in the quarter from last quarterly. Inside quarter down 3-1-2, and that triggered the year. So just like Nike, notice the inside down back into this 3. So all of those things are breaking very similar at the same time. So we call that a simultaneous break in the white girl stocks. CCL, yeah. Cruise lines. CCCL, where's your broadening information? It's right there. Never gets old. Closes inside, or actually no, it went inside month and up last month. That's me. And you'll see this on the quarter, the 3-1-3. This is an important concept to know. They sold down and bought up, showing aggression because they went outside. Then they went 1. So aggressive, and then they disappeared, right? And then they came back, attempted to sell down again, and then countered by a more aggressive buyer again. So this is more likely to resolve higher above this, 1892. So above that, you would put the year in force. And you can see we've reclaimed this big mother bar here. So that could go a lot higher. We'll see. You also want to look at Royal Caribbean, which you'll see unlike CCL or RCL. Unlike CCL, had the 1-2-2 last year and it reconfirmed it this year. It did that with the momentum hammer month previously, so 3-2 month before. And it's just been 3-2 expansion on the quarters for so far. So we'd redraw the try something like this. And then NCLH as well. You can see this is why the mother bars are so important. Notice you go mother bar to that. It's 4 years inside of this. Worst stock to buy, right? It's going nowhere. You're nowhere near taking that or taking that. DLR, all right. I believe DLR is going to be in the real estate, so take a look. Inside year up in force with the quarterly inside bar reconfirmation of that with full time from continuity. Weekly 3. So be aware of that, but looks good. Quarter to confirm a year. SPGI. Inside year up, but no continuity. Does have the 222 quarter. So quarter confirms year, just less continuity. ACDC. All time lows. No thanks. EPM. Does have the 2-2 year. Could have the 2-2 quarter. It is pivot machine gun. I don't personally trade $5 stocks though. MBLY. Inside quarter all time lows. Shooter month. Inside week. So you could have the month into the quarter. So your try looks like this. So these two bars outside of that, now what? They already made the 3. What's the next move? Inside quarter. Is there any analysis you do different? Nope, it's all the same analysis. If we go to a quarterly or yearly chart, it's the same thing if we're trading a 60 or daily chart. Low. Inside year doji doing nothing this year. Hammer counter shooter quarter, but that can also show lack of, lack of interest with the inside year. So they tried to reverse up, failed to do so, staying stuck inside of these two. Tried to reverse down, failed to do that. So they're just not aggressive in here. You have a hammer counter shooter, so maybe it gets going up into these guys, 35-30. On the month, you can see same thing now. They tried to go down, they tried to go up, didn't really resolve higher, so now what? These two inside or outside of that. We do have is the 1-3 hammer week. So the weekly rev strat could get the quarter going, potentially. If that works, you take these guys out for the rev strat magnitude at 30-35. Then we'll have to see. Verizon. So this one, triangle out quarter. So it did come back down, but did not reverse. Went 3-1-2 last month from the looks of it. Not trusting these charts for some reason. But technically, you could call that momentum hammer. It's not ideal. We want to close in the top 33% of the candle. But the month, you could say it's a 2-month inside bar pattern. What we'd want to do is look at T, and AT&T has reclaimed. So it's been a lot higher before. Potentially AT&T, if it goes 2-2 year, could look a lot better. This is outside quarter, which shows aggression. So notice the buyers here, they initially sold down, right? And then boom, buyers step up. So this shows a lot more aggression compared to VZ, where they just kind of went doji, right? There's also IYZ, I want to say, is the telecommunications. So IYZ, you can see similarly, just the whole sector is not doing much. So notice there's no continuity there. Whereas if you go to like SPY, you can see you got continuity. Semis, you got continuity. NVIDIA, right? So we want stuff that looks like that. Or when we look at like Starbucks, you can see you got continuity. So that's a short. You got a Nike, also a short. You got continuity. So we want, once we're this far into the year, we want stuff that's moving with news, or we want long green and red bars, ideally both. Amazon, it was on the last macro vid and the yearly vid. You got the inside year up, makes all-time highs. And there was the 3-2 quarter. Currently, you got nothing going on. Your all-time highs. So we call that exhaustion risk. With the new quarterly flip, it could potentially exhaust. We'll have to see. Mindy. So Mindy, you got the inside year up. Good. You got the momentum hammer quarter. Good. It's been a lot higher. Good. Looks good. VLO. You got 2 up year. Hammer month, just like the XLEs. So VLO looks good to try and get the 2-2 going. But just be aware you're going to open an inside quarter. So you just got to be aware that you don't have a 2 on the quarter, but you will have a 2 on the month. So each month it's got to stay 2 if it's going to keep going. Probably not trade this week because of the new month, new quarter holiday. Yeah, I mean, if I had a choice in the matter and I wasn't scheduled, I would take the whole week off. They're pretty good the last 2 weeks with kind of just like very specific stuff, and I got no reason to be in a rush. So this is the part of the video where if you guys have anything you'd like to chat about, concepts, questions, anything like that, those questions are welcome. Sit down. Silver, we did go over it. It's going to have the year in force at exhaustion risk. It's reclaimed, so be aware of that. Nowhere near a reversal quarter, and you got this inside month, so you got to resolve this equilibrium. The question is, does it resolve lower, or like maybe a rev strat since we're mother bar to this? What you'd ideally want if we're going to go for the buys is poke down and then all the way back through. And gold, you're going to have a similar thing inside month. So we'd prefer it to poke down first and then back through the range. But we do have some hammers counter shooter in here on the week to start. Very long question on my actionable signal video. Yeah, we can take a look at that. Yeah, Austin, when it comes to the longer time frame signals, it's the same thing as what we're doing day to day. Like if you're a day trader, you can change your signals you're trading every day. If you're an investor or like a position trader, you can change your single signals every quarter and every year. So like if you're on SPY inside year and up and that's all you want to do, then you can just do that or anything also doing that, right? So the signals change however much you want them to. But what we're doing when we're intraday and like intra week trading is we're using the day and week signals to confirm or negate the longer time frame signals. So like if we're trading and I see a daily hammer and it confirms a weekly and a monthly signal, it's like that's a really good setup. Um, Same thing as if you find a weekly signal with the month, the quarter, and the year going, then like that's a good position or swing type setup for a longer term trade. Um, which actionable signal video are you talking about? Cat lovers, tell me when you exited D Dog. Which reversal against you did you exit on? Wait, on the stat video? Let me take a look at. All right, so here's the question. I understand everything you said in reference to the video, but I don't understand why people are more likely to be trapped in a reversal after a hammer versus a standard 2-2. Does the hammer show sellers are trapped or buyers are more aggressive or both? Would you think that the reversal that caused the hammer would make sellers think these buyers are serious? I'm going to exit today, this candle, as the hammer is forming. Why wait till the next candle? A bullish kicking pattern is a 2-2. So what the hammer tells you is, like when I look at this gold weekly, what it tells me is, well, first of all, we're countering a shooter. So buyers attempted higher, countered by more aggressive selling. Sellers attempted lower, countered by more aggressive buying. So it tells us that there's a more aggressive buyer that just showed up and told these shorts to get the hell out of here, if that makes sense. So if we pair this with what we know to be true with full time frame continuity, where we know for sure they're all taking the offer, and then we know there's a more aggressive buyer countering a previous seller, that makes us really likely to go. Whereas if we're just trading any 2-2 reversal, like for example, if we're just trading 2 down, 2 up in here, it's a reversal, yes. It's now going up, yes. But this closed green and this was going up before. So is anyone really trapped short? Maybe. There might be some, but there was no trapping of shorts, if that makes sense. Like these guys were more aggressive on the buy side before. So there's no seller we're countering really. Let's see. We have an example of any 2-2. It's like this 2-2. Was there selling going on previously? Yeah, it's a 2-2 reversal. The only thing is it opens here, trades all the way up into this, and then takes that out. So on this way up, they had their chance to get out. If you're a weekly participant, you're shorting on the week, you had your chance to get out. Once it takes that out, now you have to get out. So that's the difference. Now they have to get out above this. They did not have to get out before that. But they could have. Because we know as we trade back through this previous weekly range, we're triggering stops as that's occurring. So the reason the hammer and shooter is what we look for is because we don't know that's going to happen when it's going to happen, right? Whereas let's say we have this hammer week, we can go into next week knowing, hey, these guys are short. They didn't get out of their shorts because this was still going down. But this lower wick tells us either seller exhaustion, the sellers are done selling, or a more aggressive buyer has showed up. And right when this becomes a 2, now we have all week to go after it and take this out, which it did. And it's back through a previous range. And at that point, I don't believe you had full time from continuity. Let's take a look. Yeah, so you had the new October, boom, 2 down week, and then 2-2 on the second week of the month, changing into full time from continuity up right there. And that's what we look for because now everyone's taking the offer. These guys from last week are trapped short, and it's enforced to the upside, so they get cremated. And does that mean we can't take a 2-2 reversal? No. A great example of one that we had not long ago is this waste management. The 2-2 week in here, you can do that, right? But it's a 2 down in green. So you see the sellers tried to sell down, the buyers countered. So it's not an actionable signal in the same sense where it's a hammer, but it tells you the buyers did show up. When this goes 2-2, the rejection of these lows and that buyer is still buying. So that's what we're picking up on. Whereas when it's like a hammer like this, you can see they blow them out of the water. It's going to be shorts in here, trapped, countered by a more aggressive buyer, but they could have stayed short as this stayed right here. Whereas in here, they could not have stayed short. It was green on the week, making new highs. And the reason that is because when we look at a candlestick, we're identifying a range, right? The the depiction of the wicks just tells you what had happened in the range. So like if we have this doji outside bar 3, we had a previous range, and then we had it open, it traded up, traded down, and then it closed back inside the range. So like when I look at this, I know exactly that has occurred, right? So in this case, since if we go and redraw that here, it opened kind of right in the middle of the range. It opened in the middle, traded up, traded down, closed back in the middle. So maybe there's some guys still staying short here, but you can see this we could either say is short covering or people came in and bought, stopping these guys out. So there's not anyone really trapped in this. Whereas if we have like a hammer, it traded here, traded all the way down, came all the way back up, and it did this very aggressively. So within this range, if you stayed short, you're going to be really in trouble if we take this out on the next bar. So what we're identifying is just what did that previous range look like and how much or what odds do we have that should resolve in the other direction. So this shows us that they tried to sell it down. So it opened, they tried to sell it down and then countered by more aggressive buyers. That's what this candle looks like on a lower time frame. So what we know is there's more aggressive buyers in here. Now if we pair that 2-2 with full time from continuity, where you can see once we trade above this month open, now it's go time because we have a reversal, we have a buyer, we have full time from continuity, it's going up. Then we can gauge the magnitude. We can say it's trying to go back up into these guys. So you can see it took out the first target, did not quite make the new high. It's just pennies off, but very close. And then that same concept is true about the rev strats and everything. So when we're looking at, let's say, a 122 rev strat, you have this one, and within this one, what do we have? We have a smaller time for broadening formation. So we're going to have a chart that kind of looks like this on the lower time frame. So this is like an inside week. On a 60-minute, you're going to have something like this. So we know it's an equilibrium, or it's a 1. We also know there's lower time frame broadening formation. So if it breaks higher, what's happening? Buyers are taking the offer. It goes inside, and then buyers take the offer. It's going up. If it does that, and then reclaims like this, what we know is, well, they took the offer, right? And then they were countered by more aggressive selling in the other direction. So what that range would look like is like a shooter. So it opens, trades up, comes back in. So at that point with the rev strat, we know if the next bar is a 2 to the downside, the magnitude of the 2 to reversal is to take this out. And then we also know we want to see the mother bar as well for the rev strat, because then we can go these 2 bars outside of this. So we're either going to call it a soft rev strat where there's no shooter signal like this, or we call it a normal rev strat with an actionable signal like a hammer or shooter, because we know buyers took the offer and then they got countered. Either they started selling it, taking their profit, or a more aggressive seller stepped in. But both of those things are good things. So if you go to something like SPY, you can see, and we'll actually go to ES. It's a better example of this. You can see ES. I mentioned on Twitter, it's like, well, we're getting out of this mother bar. So what do we know about that? It's like, well, either this breakout's true or it's not. So when it reclaims this level, what's happening? Anyone that took the offer here, they have to start selling and get out. And then we look for it to come all the way back through the range, which you'll see it. They missed it by a penny down here, but that was what we were looking for. Outside day and then outside again. If we go up in here, you'll see exactly what we're looking for. Shooter 60 actionable signal, and then boom, right there. Shooter counter hammer, two inside bar add, down again, then penny off the lows, and then back to stuck inside. So you can see we have the very aggressive move up and down, which creates this. And then we know that range is more likely, if it breaks this, to actually expand in the other direction as these guys are stuck in long positions. And when that occurred, if we look at SPY, you'll see we changed daily continuity SPY. So anyone that was long today is in a losing position as the daily group is now underwater. It was bright green, then it flips red right here. And this is where I took my short. I made like 400 bucks. I was off the screens that day, so I just took one position. That was my trades for the day. But you can see all-time highs exhaustion risk, reclaim, and then inside bar actionable signal. Back the other way. So what setup should you start with? Inside bars are great, but what you can't do is go and trade every single inside bar. Uh, because you need the higher time frame context. So you need the day, the week, the month, and the 60 group. And then you need a trade with periods of control. So if we're trading with the day and 60 groups in our favor, such as this inside 60 break lower where the day and 60 were red, that's a good signal. Back through previous range, actionable inside bar, makes the new high, reclaims, then back through. Whereas, let's say we're trading this inside bar. We're still an inside week at that point, doing nothing. So when this inside bar breaks, it's inside week. It was a 2-up day, I believe. Let's see. Yeah, so it was a 2-up day, but inside on the week, doing nothing on the weekly basis. So in this breaks, we have much less evidence that should work, if that makes sense. So this, although it's an inside bar, not the same as this. And if we go to like up in here, for example, notice the day in 60 went red off the open here. Then the inside 60 SPY, pivot machine gun through this. And we posted that to Twitter. Puke, bottom of the try. And it's a simultaneous break where you're going to see Qs also at the inside 60. Dow Jones. I actually don't believe Dow Jones was part. I think IWM was part of it though. Sorry, I'm losing my track. Yeah, here. I to BM was also part of that. 312 reversal makes low a day. Net. So you have an inside month. You do have a monthly broadening formation. The quarter could become a 222. The year, doji. So what we got to be aware of is the year. You need to reclaim this or rebreak 86.91. If you can't rebreak that, this is trying to rev strat, right? So you got an aggressive seller that did come in here. If this month works, it could re-break the year in force. So what we do is we'd use the month above 84.22 to trigger 90.82, and then it's up to the higher time frames. They can take the offer from there. But notice you have previous range to come back through. You'd have full time frame continuity with the inside bar. Now, the way you supercharge that or make that work good for you is you want signals to confirm higher time frame signals. So once the month's an in-force signal, does the day form an inside bar? Does the day form a hammer or something to confirm that? That'd be our question. So we can let it break initially by itself and then look for reconfirming signals because it'll increase your odds. And when it comes to like, if you're going to have a really long green bar, for example, this weekly here, you'll have a lot of 60 signals during that weeks of trading because the signals are what cause price movement. So when we say actionable signals are important, and there's a question there, why are they important? It's because our signals cause movement. So the more signals we have, the better. Because you can see like they chop, 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 inside bar signal, and then it causes movement, and then things start happening. Obviously, there was like the inside shooter in here, which did work, took this stuff out, just didn't stay down. And then you get another one here, and then it gets it moving again. So if you can line that up with multiple signals across 4 or more time frames, you increase your odds of that trade working by a lot. And the best example I have of that is TSM. So TSM on the quarter, and this is one we took, it was a while ago, but above 105.52, it goes inside quarter and up in force. That quarter took the 312 up in force. So we have the quarter and the year signals going. Then the month was just twos to the upside. The week, third additional actionable signal causes price movement above that. And you can see, boom, 3 signals in force, which causes that big quarter and yearly move to start happening. So when you line them up, that's where you get this. If you do not line them up and you trade conflicted, without a period of control, without multiple signals, you will chop yourself to death. And this is something we pointed out. If you go and look at the February video, weekend video, we pointed this one out very specifically. We're like, that 3 signals confirming each other. It looks great. And this is the next thing we're looking to add to the bot. We're working on, for the scans, we're working on trying to, like right now, this is how it works. So you have, let's see. So this is how it works right now. We have the scan site and we have a list of setups. So we have a setup list and it just updates a ton of lists of setups. So when you click scan here, you're scanning a list of setups. You're not scanning the market. But what we're going to do is get rid of this and hopefully in the near future, be able to scan the entire market all at once. And then once we can do that, then we can have you scanning the week, the month, the quarter, the year, the day, all at the same time. And then you can really start lining those signals up. And then from there, we're going to start building out a lot of the more fun tools once we are able to do so. So what I want to answer your question more fully, what I'd want to wait for is give me extra signals on net to really line that up in our favor. And we're hitting just about the hour and a half mark, so I'm planning on ending it right around at that moment. Unless you guys have other questions, then feel free. We can get chatting. Okay. You traded against higher time frames on the SPY trade, right? So SPY on the day. If the day and 60 are red, immediate controls to the sellers. And this is something from the boot camp, which I saw you ask. It was something we ran as a way to onboard people and get people, I guess, up to speed on the strat. But if we go and take a look at the continuity section of the boot camp, time frame continuity principle, you'll see this. So you already know bullish and bearish continuity, right? You have the monthly group, which is the institutional group, the weekly group, which is the weekly group, anyone that traded this week, the daily group, anyone that traded today, so what's happening today, and the 60, which is right now. What is happening right now? So there's two types of continuity. You have intraday, 5, 15, 30, 60. Notice 4 time frames in alignment. That'd be intraday full time frame continuity. Then you also have standard full time frame continuity, month, week, day, 60. So what we can say is if the day and 60 were the same color, we have full intraday continuity plus daily continuity. So we have 4 plus 5. So we have 5 time frames in alignment as a day trader. So we can take that. You ideally want to have the week and the month and the quarter and all that stuff also backing you up, because then you have even more confidence in your trade. But if the day and 60 are confirming each other, you got full intraday continuity. Thus, you can take an intraday position against higher time frames that are green or red at that point. And if we take a look, you'll see. So when the 60 and daily groups are confirming each other, they override the monthly group for immediate control, because today and right now is going in a different direction potentially, right? And this makes the flip very important, because it will either continue to give daily participants control or change control back to the 60 weekly and monthly groups. So if the day and 60 are red, the week and month are green, right now it's going down, right? Now let's say the new 60 opens, we have the flip, and then the flip goes green. At that point, we have no evidence of that daily seller who was previously selling. So if the day was red and the 60 was green and the week was green and the month was green, that's a triangle out, and then they're trying to buy the dip, because at that point, no idea if that daily seller is even around anymore. And you can see, for example, in this scenario, we have the day, the week, the month, period of control, and then the 60, this is all corrective. Because these 3 time frames are confirming each other, that's a strong period of control. So anytime this is green, that's corrective activity, it's going down. We know that. Now, if this day in 60 is green right here, that seller that was previously here, we don't know if they're still here. Does not mean we have to get out of every short position if we're short from here. It just means we have to be aware of that, right? Maybe that needs to change, which it would if we're going to keep going down. And then you can see they go inside 60, inside 60. So it didn't reverse, going nowhere. The next day opens, goes red, 2-2 reversal 60 here, full time frame continuity, so they make the new lows. Then similarly, corrective activity. You can see period of control against very slightly, and then inside 60 down, back into full time frame continuity. And then slight corrective 60, and then back into continuity. Slight corrective, back into continuity, and then boom, change in control. So notice the day, the week, and the 60 go green here. We have no evidence of the monthly seller. Is the group this week, the group today, and the group right now are all buying. So at that point, we'd flip our longs, or flip our shorts to longs. Where you can see the 2260. There's also another 2260 in here. And a period of where you can see conflict is what we call it. Notice we have 2 red time frames and 2 green. At that point, we'd say price is conflicted. We don't know. But since it's a 60 group, it changes every 60 minutes. So this 60 red, this 60 red, this 60 green, back into period of control to the upside. Yeah, the boot camp was something we did on, if you go on the website, stratalerts.com/bootcamp, you can take a look. Nope. When we talk about continuity, we always want to ask ourselves, what would that create negator do? Because continuity is a constant series of confirming and negating. So when this day goes inside and up, it's reconfirming full time from continuity up, confirms. When this goes gap up and then flips red, negates, right? Then 2 down in green, does nothing. Goes 2-2, which tries to reconfirm the higher time frames, fails, negating the daily continuity, changing what we know, and then it goes 3. Then you can see it's a chop shop in here with the inside week. Then we get to the most recent day. The first 60 of the day is green. Why is that important? It's the first 60. When this second 60 opens, if that flips red, we don't know if the daily group is still buying because it's the second 60 decoupling. Because the first 60 of the day and 60 opens are the same. The second 60 opens at exhaustion risk, timing the top. Because when that flips red, now it's trying to come back through that previous range, the 60 group. The inside 60 signal right here at 547.32 or 547.27 has 10 cents to change daily continuity, causing everyone trading long today to take an immediate loss as we're trading below the daily open. The daily group no longer more aggressive to the upside. Sellers win. So you can see the 60 flip occurs, and then the reversal occurs, and then boom, all the way through the try. For example, Monday or Friday morning opens as a 3. 2 expansion, boom, 2-2 here. What does that change? Well, at that point, you'll see time frame continuity. Sorry about that. You'll see time frame continuity was conflicted. The 60 and monthly groups are buying, while the day and weekly groups are selling. But at this point, when the 60 is green, we have no evidence of a daily seller because the 60 is currently green, so it's going up right now. So could that create negate or do something? Well, since this is a morning 3, if we reclaim that 3 above 520.87 and then take the other side, since we know price does that, would it change daily continuity? It would. Because above this, 523.61, all the daily participants have to cover. They're going to take an immediate loss. And when you take out the morning highs, that's what causes the short covering. So if you go and take a look on like a 5-minute basis, what you'll see is this. They reclaim the range, they're coming back through. Notice, right when the daily continuity changes here, boom, short covering rally. So notice, reclaiming a 3, we know what that will do. It's going to try and take the other side. If that works, notice how you change continuity, because it's always constantly confirming or negating. Where do you set your stop on the gap play? Since it was a simultaneous inside bar reversal, we would widen the stops and we'd take them all short. So we'd short Qs inside 60 down. We'd also add on that ideally. On the Dow Jones 322, you could also short that. And the stop would be a reversal against, because you also see IWM was a 2-2 down. And then SPY had the inside 60 with the Qs. So the inside 60 SPY and Qs simultaneous break, you could short both of those right there with a wide stop as a reversal against you, given the fact you have a lot of evidence. Everything just broke and negated the day. And then you would add as it works in your favor. And in this scenario where it closes out at the lows, you could just hold it and see what happens next week. Given the new quarter and new month, we don't have much expectation quite yet. And that's why we like to use multiple stocks, multiple time frames, because we can increase our evidence. Let's say that 60 broke with full time frame continuity, a weekly shooter in force, and it was a simultaneous break across all the indexes. We'd give it the widest stop we could with the reversal against, because if that works, we have full time frame continuity and a weekly shooter. Like, we want to be there. Whereas, let's say you just have one 60 signal during an inside day, and it's not a simultaneous break. It has full time frame continuity, but it's an inside day. You wouldn't want to widen that stop up. You'd want that to go right away because you don't have much evidence. Nope. Oh, yeah. On a shooter, it's because the condition's different. Where when you have a shooter, you want it to just go right away. Because, like we've already talked with the shooters and hammers, it really shouldn't stutter, if that makes sense. Like, for example, if you have this hammer counter shooter momentum set up right here, you don't want that to come back. There's no reason it should, because you have full time frame continuity. Every time frame's green. This seller is trapped, and these sellers who are up here have their stops up there too. And then every participant takes the offer. So that should just go. There's no reason that shouldn't. Whereas, let's say 322 here, everyone's taking the offer, but no one's trapped. So you might get more triangle out in that scenario than you would on a hammer in that sense. But let's say you're taking this momentum hammer day and you have full time frame continuity, everything's going up. You can widen the stop up, but we prefer not to. I want to see them go pretty much right away. 31st of May. Yeah, it was a gap up, which changes your continuity. Whenever you have a gap, it's like it sends a wave through the continuity. It changes what everyone knows. So that's why we say gappers specifically are something we look for and look to trade, because you could gap with full time from continuity and negate everyone all in one day. Let's see. William Sonoma. I can tell you every time frame is really green with this gapped up, but that changed what we knew. It was a gap. And then Revstrat 1-3. Gap and crack. What type of trader? I guess I've always been more so like intraday, but like the shorter time frame swings and stuff, like weekly signals with quarterly or monthly signals, I normally also do that stuff too. So it's kind of both. There's when you trade the strat, it's really more so not about what type of trader you are. It's more so what how much time do you have? Like if you can sit here every day, then you can sit on the same monthly signals every day and trade the 60s and the daily breaks and create big positions on the whole move, whatever whatever way the month is going. But let's say you're not that and you don't have enough time, then you can take the monthly signal that is triggered from a weekly signal and just hold it all month. But it's going to do similar. Personally, my favorite or like my favorite kind of trading is with the gaps when you got some really good gap setups like kicking patterns and stuff where you can just load the boat and either it goes right away or you don't stick around. Is like if you get a hold of a nice kicker, there's no better days. There's one more recently, not a full kicker, Marvel. We played it, not fully, but like when you see this type of pattern set up, oh yeah, short in the morning and hold. And then you get those on the big names like Costco, you can make your whole month in a day. Yeah, best. And this is what we're gonna do on the stream. We're just gonna scan. And we're gonna see like where are the twos on the quarters going to start. Where are the signals? Because if we open up the new quarter and everything opens one, and there's like four signals in force, no thanks, right? Especially with the really short week we got going, I'd rather enjoy the time and do something else. But if we open and we got a ton of weekly signals or a ton of quarterly signals concentrated in a sector or in a specific direction, sign me up. All right, this is the last question we'll take. How often do you trade SPY versus individual tickers? So like when things are moving, indexes are great to trade. Like when you see indexes moving a couple bucks in the morning, normally you can stick on those. Uh, Individual tickers, I like the signals. So intraday, if we have stuff we can find that's moving and still has magnitude, that's also good. But I would say trading the indexes almost every day. On when like SPY's an inside week and we got a whole lot of nothing going on. This is where we're like we get on and we just kind of like sleep and watch the gappers and that's it. But when you have like signals in force, like when you had the hammer week SPY with the inside day, yeah, all day I'll trade the SPY. But like I always say, even on Twitter, is like where the big money is made is when you can get on the things that have nice long green bars. Could be the indexes or it could be something else. But as long as it's that stuff. Backtest, we don't have to backtest. It simply is just how it works. Because there's a three is always going to start as a two first. So I already know if I was trading D Dog today or this day here, I would have shorted it for the outside bar. There's probably a 2260 in there, or maybe it's a full outside 60. We'll see. Yeah, so they had the 3260 expansion. Would have been a short setup. I know exactly how to do that. So there is no back testing. There's also no need for a trade journal. It just doesn't make sense. And it's because we already know what we're looking for. If you have a signal continuity back through previous range, good. That's what we're looking for. Outside of that, nothing surprises us unless it's a three and we didn't expect it, but normally we'll expect those to come. Do I journal? No. Do I do like, do I think or do I like reflect? Sure. Like if I'm like, well, I could have done this better today, or I missed that. Why did I miss that? What did I miss last night? Like that type of, like, sure. But if you're gonna journal, most of the time it's gonna become a book of your losers, and then you're kind of just like moping about your losers. If you have to, and you're like, I need to journal, what you should be journaling about is like how many signals did I have in force when I took the trade? Was it conflicted? Were all the time frames agreeing? Were any of the higher time frames inside when I took that trade? Which actionable signal did I take? What was my stop? Was it a simultaneous break? And then from there, it's like, well, if all of those things are true, it's like it was simultaneous break, full time frame continuity. I had three signals in force and blah, 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 blah. And you stopped out. Well, it was a good setup. You just stopped out, so be it. Maybe you get back in if it re-triggers. But if you're trading and you're like, well, this is conflicted and it's an inside week, inside month, and I took the the inside 60 break to try and trigger the day and it didn't work. It's like, well, it probably wasn't going to work before you took the break. Like we already know that. I trade mostly options. The non YouTube comments are coming from the premium chat in stat trading. But that's going to be all from me tonight, guys. I will see you guys in stat. I believe what we have Tuesday and then is it Wednesday, Thursday off? Let me double check. Yeah, so I'll see you guys Tuesday. Honestly, it's probably gonna be a low volume day, so we might not stick around very long. We'll see if there's any gaps going on. But then Wednesday, Thursday, no stream. Then Friday, it's gonna be me again, and we'll see what they set up into the second week of the month after the short week next week. So that being said, I hope you guys have a great rest of your night, and I'll see you guys in the nightly and weekend video. Next week's weekend video is going to be more important as we'll have some initial data on where the breaks are occurring and what weekly signals we got for the turnaround Tuesday of the weekly decoupling. That's going to be it, though, so I hope you guys have a good rest of your night, and adios.